Hi guys, trust you all having a great day. I'm Wittee or Wittee FX as you guys know me, and I want to talk about a follow up. This is basically a follow up video on the previous video on how to create a complete trading plan. And if you haven't seen that, I guess it would be best if you go to my YouTube channel and watch that particular video. It will definitely do you a lot of good. And yeah, it's been a while I last did a video been all about doing a couple of other things. However, I've gotten so many responses about the trading plan, so many people asking about how exactly to select each or to choose each of the elements of the trading plan. And remember, looking at it, this is um, the elements involved in creating the trading plan, like what we spoke about in the last video. We're going to be looking at each of them one by one because most people come to me and they're like, BT, I've seen the video, it actually makes a lot of sense. I realize I've been missing out on so much in terms of my trading because I actually don't have a plan. However, my issue now is how do I select all the elements of this plan? So that's basically what we're going to do today. So the elements of a complete trading plan are first of all the what, which is the currency you trade, the currency pair or whatever market you are trading, whether it's stocks, cryptos, whatever it is. And then the where you trade best, the when you trade best, the why you trade, and the how. How- However, today we're going to be looking at the what. So let's get straight up into it. So basically, what involves the the pairs you trade now. So basically, I did a categorization, or rather, how I like to categorize my pairs. This basically sum up most of, or literally all the major pairs in the forex market. Yes, we all know the major currency in the forex market is the dollar. However, there are also some other currencies that are popularly traded. Um, so starting with the movers. So I categorize my pairs into movers, commodities, and safe havens. And then the fourth category should be exotics. However, I don't have that on this slide. But then we all know that if it's not yet, it's definitely an exotic. So why I say dollar, euro, and pound are movers is because if you look across board on the normal forex currency, you realize that these are the pairs that yeah, how would I put it? These are the pairs that move the most, and these are the pairs that are mostly influenced by economic data and several other things. So that is why they are basically categorized as the movers. So under movers now you have the dollar, you have euro, and you have pound. These guys, I believe, investors would rather invest in them since they are from more stable economies or countries rather and the like. So movers, dollar, euro, pound. And one major characteristics of the movers is just like unlike some other currency pairs that actually, or rather some other currencies that move at a particular time of the day or that move more. For the dollar, dollar moves more in London session and New York session. However, um, there are rare cases where, or there, rather, there are cases, not even rare cases. There are cases where you see the dollar moving at even Asian session or other times of the day. So it's basically a currency that is traded literally all in all sessions. However, it's mostly volatile in the London and the New York session, as well as the euro. Euro is also volatile in London and New York session, but it will move any time of the day. So basically, that is why they are called movers. And then for the pound, pound moves mostly in London session. So pound is the only special currency among the movers. It moves a lot. It's very volatile. However, it moves more in London session. And then for those of you who are wondering about the sessions, maybe when we go into the when, we'll break that down properly. So if you want to, if you're looking for what currency you should focus on, if maybe say you like to trade London session mostly, then maybe you should be looking at pound or euro or dollar. And if you are a New York session trader, then maybe you should be looking at dollar or euro. So that is how basically this categorization works. And these guys move the most. And then for commodities now, we have the Canadian dollar, we have the New Zealand dollar, and we have the Australian dollar. Now I categorize them under commodities, reason being that their economies are based mostly on exports and import activities. Canadian dollar exports mostly oil, so whatever happens to oil directly affects Canadian dollar. New Zealand dollar, Australian dollar are major exports of metals, steel, gold, and the like. So whatever happens in the metal market, whatever happens in countries that do a lot of production, China, US, and the like, affects New Zealand and Australian dollar. So that is why I categorize them under commodities. However, in terms of sessions, they move more. I realize that the Canadian dollar moves best in New York session. So if you're a New York trader, or if you want to be a New York trader, I think you will go for Canadian dollar. And then I also realize Canadian dollar is one of the pairs that respects technicals a lot, and it doesn't throw as much stop points as most of the other pairs. So Canadian dollar is actually a really nice pair, coupled with the fact that predicting Canadian news is actually not so difficult. Yeah. And then for New Zealand moves mostly in Asian session. However, one major characteristic of New Zealand I've discovered is that it throws a lot of stop on. So take for instance, we are expecting a trend reversal for New Zealand. I think the smarter thing to do would be to always wait for a stop on, for a clear stop on. So basically, if it's New Zealand yen, even Australian New Zealand, so far it has New Zealand in it, it's usually safer to wait for a stop on. That's one thing I realized about the NZD. I guess maybe because there are fewer people trading it, but basically that's how NZD operates. So it's very volatile when it decides to be. It could be really slow. However, if you catch the move at the right time, it's actually a very profitable pair. But then again, be very wary of stop on. So if you're someone who is very patient, you might just rather wait for on the NVD or rather wait on NVD. As soon as you see your stop on, you get in. However, from experience, I realize when NVD throws stop on, it's usually respected a lot. And then for Australian dollar, it's also it's like a more subtle version of the New Zealand dollar. So they move alike. So I found out Australian dollar moves similar to both NZD and Canadian dollar. Australian dollar is also a really nice pair to trade. It also moves mostly in Asian session. However, from experience, Australian dollar usually starts the move faster than New Zealand dollar. Maybe because most of the time Australian news is usually an hour ahead of New Zealand news. But however, I think Australian dollar is a more subtle version of NZD in terms of trading. And then the safe havens, they are called safe havens, reason being that they are used to protect capital. So investors mostly use these currencies to protect their investment when there's turmoil among the movers or when the market is really indecisive. Say there's a problem, if there's a problem with the movers, the safe havens gain strength. However, when the movers are more stable, then the safe havens investors tend to then diversify their portfolio. Let me put it that way. So basically, when the dollar is weak, you see gold rallying. When dollar is, and then I realized JPY and dollar, they kind of like move correlated. So when dollar is strong, JPY is strong, and I don't know that has been of recent. Um, However, CHF on the other hand, that's Swiss franc. We all know Switzerland is the financial capital of the world. So basically, when the dollar is strong, you find out that investors are investing largely in Swiss franc. So for the safe havens, they move anytime. You can't really put a time to it. However, from experience, gold moves either New York or London session. Yen moves early hours of the London session or the Asian session. And therefore, Swiss franc could really move anytime. However, I would rather say London session, New York session. So for gold, London, New York. For yen, Asian plus early hours of London. And then for Swiss franc, we'll say New York and um, London also. However, you should clearly understand that depending on the time session you want to trade, depending on your trading strategy, depending on how you like to trade, these are how these pairs move. So if you feel I'm a bit too fast, you might want to rewind and rewatch this video so you could probably properly understand everything I've said. So the movers are more stable in the market. However, when there's issues with the movers, the safe havens get stronger. However, of recent, dollar and yen have been moving more similarly. So in New York, you have Canadian dollar moving the best, Canadian dollar, then the US dollar. However, in London, you have pound moving a lot and euro also. Euro also moves in New York session though. However, in Asian session, you have more movement with NZD and AUD. However, NZD likes to throw a lot of stop on, so you might want to note this. And then let's look at correlating pairs. So one thing I've learned these past few months, since the whole US-China trade war and Uncle Trump has been doing his thing, well, he's been impeached now. Well, let's see how the market reacts to that. However, so for correlating pairs, my advice would be to treat each pair individually. However, if you're someone who really likes to use correlation while trading, there are ways to go about it. Maybe I could do a video later on that. But I would advise firstly to treat each pair individually. So for correlating pairs now, basically I have a couple of pairs I wrote down that move alike. That is when one buys, the other buys. When one sells, the other sells. And then some pairs that are inversely correlated. When one sells, the other buys. When one buys, the other sells. And I think the opposite moving correlating pairs are even more, should I say, more stable than the similarly moving these days. Because these days you see gold selling and euro USD buying, and I mean, however, you rarely see euro USD buying and dollar shares selling. So I think the opposite moving pairs are even a bit more, yeah, a bit more stable, yeah, a bit more reliable. I think reliable is the word. So basically, we have under similarly moving. We have the gold dollar, we have the euro dollar, Australian dollar, New Zealand dollar, pound dollar, and you realize one common denominator they all have is dollar being the quote currency. So I guess that's why they are more correlated. And then we have the gold dollar and the gold euro. Gold is obviously the base currency, so it's normal, it's logical for them to be correlated. And then the Mexican peso pairs. We discovered that across board, it's only I think in the JPY that you have the JPY as right, that you have MXN rather as the base currency. However, Australian MXN, dollar MXN, euro MXN, pound MXN, MXN remains the quote currency, so it's only normal for them to be correlated, similar to the ZAR. And then for some reason, ZAR and MXN tend to move alike. So when ZAR is buying, you find out that MXN usually is also buying. And I realize those economies are emerging economies. That's Mexico and South Africa. And these economies are largely invested in metal exportation. So when the demand for metal is high, you find out that these currencies are rallying. However, when the demand for metals are lower, you find out that they begin to surge. And then CAD and CAD chef obviously have CAD as their base currency, so they move alike. Oil and Canadian dollar, I already spoke about that in the previous slide. So when oil is gaining strength, you find out that most of the time Canadian dollar is also gaining strength. And then for the pound pairs, you find out that across board, pound is the base currency, except in the case of euro pound. So across board, if pound is strong, you find out that most of the pound pairs they rally at the same time. And remember, these guys are London pairs, so usually London breakout affects them all. And then Euro AUD, Euro NZD. First of all, we spoke about AUD and NZD moving alike, and then now they both have Euro as a base currency, so it's only normal for them to move in similar direction. And of course, then AUD and NZD, we already mentioned that. And then S&P 500 and Nasdaq um, correlating this way simply because S&P 500 is accumulation of the data from 500 companies in US. However, of those 500, 100 of them are unpicked to form NASDAQ. So it's only normal for them to move alike. For opposite moving pairs now, Euro USD and dollar share. Remember, Euro is a major, CHF is a safe haven. However, dollar is also a major. So basically, when dollar is strong, it can move the Euro USD to the downside as well as move the dollar CHF to the upside. Reason being that when dollar is strong, the investors are not really investing in Swiss franc. So that automatically makes Swiss franc weak. And then when dollar is strong enough to move the euro, then being that euro is also a mover, it's easier for the correlation to or the opposite correlation to work. So when the euro dollar is buying, most of the time you find dollar shares selling. Okay, one I didn't mention here was gold and dollar yen. When gold is buying, most of the time you find dollar yen selling, and that's because dollar yen is more dependent on the bond market. So they are basically inversely correlated. Let me not go into more details on that. And then DXA or DXY or dollar index or US index, as your broker likes to put it, however your broker likes to put it, is basically dollar. So it's the same thing as USD. This USD over here is the same thing as DXA. Basically the same thing. Um, dollar, euro dollar, or dollar, literally everything here, everything up here, they are all opposite correlated to dollar index. Reason being that over here, dollar is the quote currency across board. So when dollar is strong, all of them sell. When dollar is weak, they all buy. So it's basic. And then remember we spoke about euro pound. We said except for the euro pound, across board pound is the base currency except for the case of euro pound, which means an euro, remember, is also a mover, which is also actually strong. So when euro pound is selling, that is clear indication that pound is strong. And when pound is strong, you find that the other pound based pairs buy, and vice versa if it's weak. And then dollar index and Nasdaq. I believe this correlation is simply because these companies that make up Nasdaq and S&P 500, they use the dollar in carrying out their transactions. So when the value of dollar increases, it means they need to spend more to carry out their transactions. So it's only normal for them for their value to decline because they are spending more now for production. However, when the price of dollar decreases, then they spend lesser to produce more. So when dollar index is weak, they are stronger. So that's basically it. Um, yeah, so I think that's it, guys, on that pair. So you want to choose your pairs. Look at, are you choosing a mover? If you're choosing movers, what mover exactly? If it's commodities, if it's safe havens, and if you are looking at it in terms of time, when are you most available? Are you most available in Asian session, or New York session, or London session? You choose which ones work the best. Yeah, London trader, you should be looking at pound, euro, dollar, um, probably yen also. If you are a New York trader, you should be looking at dollar, Canadian dollar, euro, probably CHF, and if you're an Asian session trader, you should be looking at NZD or AED, JPY, and even gold at times. Yeah. So that's it from me, guys. So more videos, more training videos coming up, and remember to share this video with as many of your colleagues as you can. You never know who you could be helping. Yeah, guys, compliments of the season. Christmas is right around the corner. So should in case you need to contact me, feel free to send me an email at wittyfx@gmail.com, and I'll be sure to reply you soon as I can. Or you could also join my Telegram channel and probably chat me up on Telegram. The link to my channel will be posted down there. And of course, remember to subscribe to my YouTube channel so you get notified as there's a new video for upload. Yeah, so that's it from me for tonight. For today, rather, I'm so used to doing my videos in the midnight color of the DMR. Yeah, so that's it. Thank you so much, guys. Have a wonderful day ahead. God bless you.